Welcome to Second Take, the show that focuses on the issues behind the news. Anglo American's share price fell significantly on Tuesday, resulting in radical restructuring and cost savings. Mining Weekly editor Martin Creamer joins me to discuss. Hi, Martin.
Hi, Sashnee.
So can you tell us a bit about the fall in Anglo American's share prices and what effect this has had on the company?
Yeah, there's blood on the streets. Anglo American was formed in 1917 by Sir Ernest Oppenheimer. So that means in a couple of years' time, it should be 100 years. They should be celebrating a centenary. But exactly what it's going to look like when it gets to that 100 mark is now anyone's guess, because it's certainly a shrinking company. And this was an iconic company in South Africa. In fact, it was a conglomerate. It crossed all sorts of industrial boundaries, not only in mining. It was an industrial company. It was very important to South Africa. And when 1994 arose, they were persuaded to list on the London Stock Exchange. The idea was that you could raise capital in London and then spend it in Africa. Well, that has never happened. So, the dividend base now has been axed, and people have relied on that dividend. They've now decided that they will not pay a dividend in this period because they've got to be defensive because things are not looking good. But also they will change the whole dividend policy. They don't want to have a progressive dividend policy. They say it doesn't suit a mining company, which is cyclical. There are many, many thousands of jobs at risk because they want to bring the number of people that they employ to 50,000, and they will tell more in February when they do their presentation. So many things have happened. They've put their 6 business units into 3 business units, which means that a wonderful metal like platinum, which should be really exploited very, very powerfully and marketed well because it has huge potential, is now being put into a business unit called Industrial Metals. It must share, the furniture there with copper. Then the bulk commodities have been put together, coal and iron ore, because those are the problem children. So they're really going to have to do something. And even though conditions are not great for diamonds, of the 3 divisions that are now left, diamonds looks the best. So an incredible change in the whole outlook for that company, which was once the company for South Africa. It actually was a very big part of our economy. Has just it's a pale shadow of its former self, and will be even paler by February.
The company has categorized assets into priority 1 assets. What does this mean, and which assets were selected?
It's like a golf round. If you don't make the cut, you get chopped. Well, there's going to be priority 1 assets. Which are those going to be? Well, the only one that they would name, because we particularly asked them about it, and we should have asked them about others, but we thought maybe it would get the conversation going in South Africa, is Venetia Diamond Mine and the Venetia Diamond Project. A lot of money is being spent there, 20 billion rand, and that will make the cut. That's the only one they've named. But of course, if you look at Mogalakwena, the prize platinum mine, in Limpopo, I'm sure that is also going to survive because it is really a hugely important asset within the platinum base because it makes such good profits. In the old days, we would have said Kumba iron ore, but we really don't know because, the iron ore price is falling to a point where it looks like Kumba is going to go into that category where there's going to be zero tolerance because, the CEO of Anglo American, Mark Udufani, expressed zero tolerance for any loss makers. So if there's going to be a loss-making operation, it's either going to be sold, fixed, or closed. And closure in South Africa is not an easy thing. And a lot of the strategies in the past, even amongst Anglo American's assets in platinum, is that they close part of a mine because they can maybe perhaps turn the other part into a profitable situation. But you know that you have to go through a whole lot of legal procedures, and those are always slow in South Africa. There's labour involved, which follows another legal procedure. So to close operations is difficult, and that's why, you know, the analysts from Liberum Capital a month and a half ago put a sell on Anglo American. They said sell this because they were worried that with Kumba iron ore, you know, at that stage its break-even price was $45 a ton. It now has to bring that down to $30 a ton because, you know, the price of iron ore is falling, and they feared that it wouldn't be able to do that because it's not getting as much for its premium lump ore as it used to. It's not the premium that it gets for its lump ore is not as big as it used to be. And it predicted that this would be the first iron ore mine to close, but it's or the first big casualty in iron ore. But it's not easy to close these operations. So it was saying in the South African context, it's not easy to close. So it's going to continue to bleed, and in bleeding, it will then pull the Anglo American company down further from its position now, where its shares are, you know, the lowest that they've been in a long time.
Amplat has cut jobs in the platinum sector. Can you discuss the numbers and the savings for the company?
Yeah, there's like those are about 3,800 jobs. They're not only, you know, employees but also contractors. They're not only from companies that Anglo American Platinum controls, but also joint ventures that they got. So it's a whole mixture, you know, of cutting down, and that 3,800 odd looks small when you look at the numbers that Anglo is talking about now, because there is a risk to about 85,000 jobs, they're saying. Journalists took the liberty of making those calculations because they didn't actually spell out what the numbers were going to be, but they did say they wanted to reach, you know, a situation of employing about 50,000 people. So that's where the conclusion came, that there's going to be this massive potential shedding of jobs. But in the platinum sector, they've been carefully trying to make sure that parts of all the mines at least are profitable. They have had to close certain shafts, which has led to what they call voluntary severance packages. So the bulk of those 3,850 jobs in platinum have been packages that people have voluntarily taken. They've said, look, we want to take the package, we will leave. So it's been quite a win-win operation because the companies benefit by fewer people, but people have then taken, you know, money and left and at a level that they've been happy with. So, but you still can't see much change, you know, in the parking lot at Anglo American in Johannesburg, because I looked for parking there yesterday and I battled. So on the South African front, the numbers still look big. And UASA put out a statement yesterday, that's the union, saying they don't think South Africa is going to be, if you look at it in the 85,000 job at risk category, they don't think South Africa is going to be hit that hard. We don't know much about the coal assets because, you know, those coal assets are not listed on the exchange. We know a lot about the platinum because Anglo American Platinum is separately listed on the Johannesburg Stock Exchange, so it doesn't form that London base. And so the Amplats, as we call it, Anglo American Platinum, has to report separately. So you get a lot of information. It's the same with Kumba iron ore. It's also listed in Johannesburg, although it's controlled by Anglo American. We get a lot of insight into it because of that. But the coal assets are not listed. So it's always a bit of a dark area. You don't know exactly what's going on. But we do see that many people want those assets. And Mark Kudufani has made it clear that he has assets up for sale. You know, the niobium, the phosphates, he named them as being up for sale. And one can imagine that there are interests in South Africa that would like to get the coal assets. He says it's definitely not going to be a fire sale, but he won't sort of squeeze every last dollar out of it. So it's going to be that moderate sort of approach. It could be a time for a company to get a bargain. So between now and February, one suspects that unless these commodity prices rise And I'm sure that there are people praying for that, because that could change the whole face of what they report in February. But if things worsen, as many people suspect, you could have a lot of these assets going up for sale. And on the basis that there's not going to be a fire sale, if people don't actually pay a reasonable price, these will be closed to put on care and maintenance. But they're definitely not going to be tolerated. There's going to be zero tolerance for losses.
Kumba Iron Ore will reconfigure its Sashnee pit to a lower cost shell configuration. Why is this?
Yeah, well, this is again, you pick the eyes out of your asset. The areas of your pit that don't allow you to have a break-even price of $30 a ton, for instance. They might be, the iron ore there might be of such a quality where you can't actually get to that, or the accessibility might be difficult. If you reconfigure your pit, you reconfigure it to work it so that you can reach that break-even level that you have to. And they've been working on that pit for months now to try and make sure that it does yield what it should. And many changes have been made. At one stage, they were going for volume. Now you can see they're going for value. And it must be a nightmare out there, being in mining at the moment, because you've got no control of the price. The commodity prices keep falling, and you've got to keep adjusting your business to that. And the adjustment means making it smaller and smaller and smaller. That has tremendous implications from a human resource point of view. And you can imagine, how many families are going to be at the Christmas table, not feeling or feeling very anxious about 2016. All the comments are that next year is going to be worse. Well, some people wonder how worse it can get, because it's already very, very bad.
Thanks for speaking with us, Martin. That's it for today. Join us again next time for more news analysis on South Africa's mining industry.